We are live now, sir. Please start.
So, good afternoon, everyone. Very good afternoon to all our distinguished guest panel members. Welcome to the ASSOCHAM Startup Launchpad Masterclass series. Today's discussion is on startup investors and funding opportunities. With this, I'd like to welcome Shri Rohit Bhayana, Chairperson, ASSOCHAM Startup Council, for his welcome address. Over to you, Rohit.
ASSOCHAM startup session. It's the first one and therefore even more important. And I'm glad we've picked up a topic that we did, funding and investors. Before I get started, just a quick bit of introduction, myself and my co-chair, Neelam Dhawan. My name is Rohit Bhayana. I'm the managing partner and co-founder of Lewis Partners. Neelam, the co-chair with me on the session today, has been a very accomplished technology leader in the country, this part of the world, and she currently holds several board positions and leadership positions. So it's a pleasure to be here with you all, particularly with such a relevant set of panelists who make up from practically the entire cut from industry, startups, to a bank like ICICI, to the government. I think we have a fair enough representation. So pleasure to be here with all of you. It's an interesting time we are in. Innovation is widely accepted as the bulwark of the economy. I think it always had that sensitivity, but the level to which the acceptance is there today is unmissable. Even more so with what COVID has done. It's just made the ongoing of life, in spite of anything that's happening with the pandemic, almost be a necessity. So innovations just come forefront so much more than ever before. And startups and innovation is one and the same thing. Innovation just can't happen with normal organic capital. There's such a huge element of R&D, intellectual property, concept development, market development. So bootstrapping is somewhat possible, but how far do you take it? And the interesting thing is, never before has the market been as bullish as it is today. Never before have exits and visibility for investors, viability for investors been as high as it is today. Never before have valuations been so sustainably well developed as they are today. And yet, as always, capital seems most elusive. We live in an information age, and yet it seems that information deficit on how does a startup navigate through the waters in trying to figure out how he or she should go about getting himself capitalized is always as complicated as it was. So that's one big part of what I think we will try to accomplish today, take on a few set of very focused questions, which hopefully are amongst the critical questions. And Dave Roop, thanks for helping us develop those. I think with your questions, Dave Roop, we would be hitting at some of the most critical aspects, but I also think we will be missing some. And as we do that, as we get through the 2 to 4 p.m. slot, if we can wrap up somewhat in time, we should keep some time with taking questions from the audience and keeping a fair chunk of time for that. So just coming back to where did this whole investor session, capitalization session become so front and focused was, we did a roundtable, an ASSOCHAM roundtable back in mid-May. Neelam, I, Varun, we were all there, and we had about 70 to 80 industry representatives from all sector segments, all kinds of startups across the country were there. And we used them as a bouncing board to figure out what really matters most to them. What unmistakably came out as item number one without surprise was capital, was investors, funding. How do we navigate those waters? There were a few other items of focus for them, which were as high, if not as high, but a close second and a close third. The subsequent sessions, we will be getting in there and Varun will communicate that, but we wanted to bring this session right in the front, right as the very first session. So that's where we are today. With that, I would, Dave Roop, if it's okay, I would like to kick off the session and we can get started.
Sure. Thanks, Rohit. It was a very apt introduction and setting the context for the session. And as you rightly said, capital and investment is probably the most important aspect for a startup to get going and get moving. And we have seen over the last one and a half years with the pandemic that probably the only way we have been able to carry on our day-to-day work has been with the help of some of these new young age companies which have come in and stepped in every aspect of our life. With this, we would move on to the next part of the session. So how we have structured it is we would have initial thoughts from the panel members, distinguished panel members, and then we will move to more structured question answers. And then finally, we would have some time for the audience to come in and share their questions, which our panel members would respond to. So with this, I would request Mr. Jeet Vijayvargiya, CEO of MeitY Startup Hub, Ministry of Electronics and IT, Government of India, to come in and share his initial thoughts.
All right, thank you so much for the invitation to be part of this panel today. I think the topic is very timely because it's a timeless topic. Funding is that essential element of starting any business, and where we are in India, there's no dearth of intellect, but there's definitely dearth of capital. Now, we deal with a lot of entrepreneurs on a daily basis that are saying, hey, how do we actually go about raising the funds to convert our idea to a prototype, from prototype to a product, from take the product to the market, right? So there's funding required at every step of the way. And that is very critical because along with mentoring needed at every step of the way, technology is needed for scaling the technology at every stage, capital is needed to procure those resources. Now, where do we get it from? And I'll share from my personal experiences, give you a little context for our participants here, that the same thing even applies in the US, though it might be a more deep funding market, but actually you have to prove your method because when the investor is putting money in, they're looking for return. So ideas come dime a dozen, but translating that idea into actually economic entity is an endeavor that is fraught with difficulty, challenges, and a lot of heart-wrenching moments that an entrepreneur goes through. I've spent most of my time in the US. I was running a $100 million early stage VC fund, making investment in early stage startups coming out of university technologies, particularly University of Texas system, where I was appointed as the assistant vice chancellor as well. So we looked at a lot of technologies there, and what sets apart Indian ecosystem versus the US ecosystem is the depth of commitment of the government funding at the early stage, especially when it comes to the futuristic, hardcore, research-oriented startups. Because creating an e-commerce platform, creating an aggregator is something that we can do relatively cost-effectively. But when it comes to creating something that's path-breaking, highly innovative, and that can create a competitive positioning in the emerging digital paradigm that we are living in, requires a lot of resource commitment from the government. So now when I sit here at the Ministry of Electronics and IT, what we have developed here under the guidance of our minister and the secretary at the Saudi sir is a holistic value chain approach to funding startups. So when we look at it, so these startups actually we give grants at the idea level. So we have what is called EIR program. So even before an entrepreneur forms a company, we provide a limited amount of money through the incubators that we support to germinate those ideas into viable business plans. Post that, we provide funding for prototype. So if you're looking to develop the minimum viable product and a basic prototype, the funding is available. Then we have a program called Acceleration Program for these startups, whereby we give up to 40 lakhs of funding for these startups for focus on 3 areas: customer access, investor access, and international expansion. So that's not to develop a product, that's actually take a product to the market. And after that, because 40 lakh is not enough to get a startup going, right? It's enough to bring it to the doorstep, but not really conquer the world. So we have what is called EDF, Electronic Development Fund, which was set up a few years ago. That focused mainly on providing funding to the daughter funds, to the venture capital, VC funds, and they were deployed into these startups. Now we are coming out with what is called SPDF, Software Product Development Fund. That is again going to be a fund-of-fund structure, which will actually deploy capital into the VC funds so they can invest in the startups. And the reason we take this approach is the VCs are more equipped at analyzing the startups and identifying the winners than we are. Government can only provide resources, but cannot be picking the winners. That's the job of the experts who are working the ecosystem and driven by capital returns, right? So even under that, we are looking at developing software product startups because India has been an IT service provider country. But how do you develop actually these software products? We all rely on the Western products, be it Oracle, be it Microsoft, be it Salesforce. Now, how do we develop these technologies in India, which can be scaled up to the global level? And so for that, we are setting up that fund as well. So in essence, I would like to say that the ministry, and this is an example of just one ministry, under our Honorable Prime Minister, if we start looking at it, it was 2016. You know, I don't know what you guys were doing in 2016, but I definitely didn't think India would be the second largest producer of startups by 2021, right? But our Honorable Prime Minister had the vision that let's create Startup India mission. Let's build India on the back of our startups, on the intellect of their mind, because they may not have the capital, they have the drive, they have the hunger, and they have the intellect to create something impactful. Within 5, 6 odd years, we have become a second largest startup nation in the world. And now we are looking at Atmanirbhar Bharat. So there's a renewed focus on indigenous development of technological solutions which are sustaining, impactful, inclusive, and can actually solve the problems not only India and our neighborhood, but of the overall, the larger world that our Prime Minister keeps talking about. So in essence, what I would like to say to the startups here that are part of the program is that before you go to the VCs and the angels, you have to look at the government funding as well, because VCs will invest when you're risk ready, right? So there is a great opportunity, not just in Ministry of Electronics and IT, but look at Niti Aayog, look at Startup India, look at BIRAC, look at MSME Ministry. Every ministry is doing something or the other to encourage and promote MSMEs and startups in however way they can through the deployment of capital as well as creation of infrastructure. Even we have created, I think we are supporting close to 100 incubators, multiple accelerators. We have 26 plus center of excellences that we are funding in the deep tech areas. So the infra is there, the motivation is there, the drive and purpose is there from the government part, and the capital is there. So please do look at the various ministries, initiatives, programs, and you will find some or the other funding opportunities that you can take advantage of. And last thing I'll mention is that even if you're looking for international expansion, Mighty at MSH, we are running multiple international expansion plans with our ecosystem partners in France, in UK, in US. So current many programs are going on. So those opportunities are also available through the various ministry programs. If you're in the defense startup, for example, today morning, we launched something called Bhumi, which is an initiative of BSF, Border Security Force, and Ministry of Electronics and IT to identify innovative solutions for border security strength enhancement. And so the launch happened today morning. So please go visit our website at Mighty Startup Hub. You will see all these interesting, amazing funding opportunities, product development opportunities, and resources that we are curating for you. And if there's any specific requests and needs you have, you can always drop a line, or we'll be here for a Q&A later. But thank you so much and good luck with your mission to create something impactful. And we're here to support you in every way we possibly can. Thank you.
Thank you, Jeet, for this initial context that you have brought in the government perspective. And I think it's very important for the startups which are listening to the session today that here is an opportunity for them to come to Government of India for initial help and support. So with that, I'll move on to our next distinguished guest today, Shri Sudhir Kumar N, Director Capacity Building Program Office at ISRO headquarters. Over to you, Mr. Kumar, for your initial remarks.
Good afternoon. Let me extend my gratitude for being called to share the thoughts on the common platform for the general interest of the startups, MSMEs, or whatever you call it, as aspirants of the space, entering into the space program. See, the context is very clear. The startups is a buzzword, even though it is a fancy word nowadays for the young entrepreneurs or people who came out of the just college. But it should serve several purposes, especially for general disciplines like textile, urban development, surface transport, maybe biotechnology. Fine, the platform is very clear for them. Opportunities are very clear for them. It is only a little bit of R&D and improvement that has to take place with the available knowledge from the academia as well as from the incubators. Yes, it is possible. But when you come to the deep tech disciplines like space, defense, atomic energy, such kind of things, where the knowledge and wisdom is very much concentrated with very few number of labs like ISRO, it is becoming a challenge for the people who are interested to penetrate into the space sector. First is the knowledge. The second thing is where actually the need arises for either doing the innovative practices, implementing innovative practices, or R&D, or opportunity for surviving the basic establishment. And of course, the next is funding. Before funding, actually the mentorship, the ideas, the framing of technologies, which technology should use for which purpose, these are all very important for the young entrepreneurs. I feel government support, yes, because it is more like in the last couple of decades, the space was so concentrated. Not only space, I'm talking about the deep tech industries. Yes, I agree with the earlier speaker also that government had to extend a lot of support. It is not possible also government to support to all the startups, but there should be an ecosystem either through incubators, dedicated incubators, or dedicated labs sharing the knowledge with them. Wherever criticality is required, yes, government has to come into play. Otherwise, the trainers training, it is kind of thing. We have to develop a mediator platform. You call it as incubators or accelerators or mentors. We have to train them. These mentors should percolate to the many more startups. Wherever a specialized technology or a specialized knowledge, know-how is required, they should interact with ISRO, come back. Such kind of platform, probably I think the incubator and accelerators may not be enough for deep startups, what I personally feel. There should be one more platform, like mentor platform, even though incubators are going to connect the mentors, but these mentors are very specific, which are strategic in nature. They have to share the knowledge on strategic elements sometimes, because so that I feel very important for the upcoming startups in the space. Of course, funding provision, there is a established ecosystem available, either funds of funds or Niti Aayog or Startup India. Government do recommend or do put forth their maximum help to support the startups, but their survival depends exactly on such kind of mentorship and technological let's say sharing of technical know-how. Probably I think ISRO also gearing up to the needs of the people. We have also last year through Niti Aayog, we have selected around 7 startups, and for funding, of course, Startup India is now throwing open. We had very recently a workshop also for identifying the incubators, and we are also identifying the startups. And several accelerators and the venture capitalists they are coming forward, either one-to-one basis or departmental basis, to get to know whether this particular business is viable in the global front or in the country level. So such kind of mentorships we are expecting. But I think one level playing field in ecosystem, a constant ecosystem, is very much required for them to freely interact and get to know it as a single window. Let us see as the system proceeds. Probably I think it is an evolution process. As the system proceeds, we have to take the mid-course corrections. But ultimately, the idea is those who are hungry, we have to feed them for the economic development of the country, as well as stopping the foreign nationals to come into the India under the Make in India program. Thank you.
Thanks, Mr. Kumar. With this, I'll request Ms. Neelam Dhawan, co-chairperson, ASSOCHAM Startup Council, to come in and share with us her initial thoughts on this.
Thank you, Devru. As Rohit mentioned in his opening comments, we had a session in mid-May to discuss with some of the startup members what are they looking forward to and what are the key challenges. And as we all mentioned, financing is one big issue, and how do I raise capital? It's not about the quantum of capital, it's also the cost of capital, which was really discussed in our forum. And I think that cost of capital is one thing which is top of the mind, and it should be for most of the entrepreneurs, besides the quantum of capital they need to raise. As I interact with many startups, I find the promoter or the entrepreneur himself is pretty distracted. and how can they focus on what they need to do? Because A, they are developing the technology or the solution or the product for their company, which they want to market. B, they need to raise capital. C, they have to get customers for the same solutions and products. And all of it seems to rest on the CEO or the promoter. Getting talent to work with startups is not very easy because everybody knows startups means very long hours and uncertainty about whether the concept will succeed or not. So getting the right talent is the second big issue which comes up every time we look at these companies in startups. And I would say the third thing which is on top of mind is go to market. I mean, while or we may develop products, to get the first customers is extremely difficult, and that itself leads to a number of POCs to be done, and then the POCs may not just work through well, or even if they work well, clients and customers have options. The last point which I would like to make is it is difficult, and I'm really grateful to Jeet for outlining the programs which METI is running. Each ministry in the government has many programs, and none of our startup community friends know which program they can use. So even if you look at the Q&A of this session, which is on the side, you will see the questions are all about how do I get to know which programs the government is running? How do I take part in those programs? So this session is extremely useful to understand those programs itself. So overall, I would say, Devrup, challenges are plenty on talent, on capital, on cost of capital, and getting the first customers and growing the business. And I think the startup community has to make the difference which they want to make in the country, but these issues need to be addressed for them. Thank you.
Thanks, Neelam. Those were very pertinent points for the startup community and the whole ecosystem. With this, I would like to request Mr. Sandeep Goel, SVP for Mooglix, to come in and share his initial thoughts.
Hi, good afternoon, everyone. First of all, hope all of you are keeping safe and doing fine in very challenging situations. I would just like to echo some of the thoughts which are shared by Jeet, Mr. Kumar, Neelam, pretty much on the same line. See, first of all, startup has definitely become a buzzword. It's a fancy, which especially youngsters passing out from colleges and all, the dream is to work for a startup. And that dream is somewhere not driven by the cause or the problem people are solving. It's driven by the fancy valuations or billion-dollar exits or, some of the lifestyles that somewhere the startups ending up communicating. So first of all, putting it in the right perspective, having some kind of education, etc., is quite important, what I feel. And that's where, and based on, in fact, some of the things I'm hearing in this session, I'm hearing them for the first time, that these kind of platforms exist for people's awareness. So I think awareness is quite poor. If we can integrate it with our education system in some manner at all the key institutions, these resources are made available or courses are landed, that will be quite important. Second part is on the mentorship with respect to interpreting the startup in the right manner, having the right ideas, and we'll discuss some of those points later on in the session as well, I'm sure. That's quite critical for people to understand that you build a sustainable business. And very often you see, in fact, we were reading some analysis report and we realized that only 22% of the startups have enough money to sustain their operations for next 6 months. The rest of them are going to run out of the runway. So that means the whole financial discipline, understanding the funding aspect, etc., is quite poor, and people they end up burning cash quite quickly and then land in a difficult situation. So on those areas, mentorship will be very important. The third aspect, again, I'll explain it with numbers based on what we have seen in 2020. If you see, there were 10 unicorns that were created in India. Total funding which was raised was around $12 billion, $11.8 billion to be precise. While in some of the other countries whom we compare with as a startup nation, the funding raised in United States was close to $143 billion. which went up into startups. In China, it was around 83, 85 billion. So still, we have quite a large headroom given the number of youngsters that we have in terms of engineering side or across the areas, whether medical engineering or any other area. Still the headroom is quite high in terms of what we can start pumping in and what we can start doing. So of course the infrastructure has to be created for that. Pre-seed is a very critical phase when people are validating product market fit or they are trying to do a proof of concept that Neelam used. And I think we'll have to figure out that how do these phases get funded, because that's where many good ideas are dying today. So I would say as a whole, it will be a three-part thing that we'll have to do, putting the startup as a word, as a concept in the right context, mentoring founders, entrepreneurs in the right manner for fiscal discipline and building sustainable ideas. And then, of course, then looking at the massive headroom that we have to lead the world. We have the talent, we have the ideas. Execution is where the focus will need to be.
Sure. Thanks, Sandeep. With this, I'll welcome Mr. Vikram Gupta, founding partner of IBCAP, for his initial observations.
Thank you so much. Thank you so much for having me on this panel. Just a quick introduction. We run a venture capital fund, which is 1,500 crores of assets under management. We have about 30 portfolio companies across different sectors. We've raised our entire capital domestically in India with large number of Indian institutions as our investors, and also the IIT Alumni Trust as our sponsor of the fund. We typically invest at Series A, and with most recent our angel fund, we started investing at seed and pre-seed stage as well. We are in the process of raising another 1,500, of which we have raised half of the fund already, all domestic again. So just to give you my perspective on how this ecosystem I have personally seen develop over the last 10 to 15 years since I've been investing. I think I'm quite amazed by the velocity with which the number of startups which are building up in this country, and the number of VC funds and the funding which is available now domestically as compared to startups having to raise money outside of India. I think that has quite substantially improved. What we have done, we have actually given the fact that we have a large number of alumni of the IITs to investing through this alumni trust into our fund. We've actually brought this entire ecosystem together, and part of our profits of the venture capital fund from the fund manager's share actually go back as endowments to the IITs. And that structure is now actually getting validated with the profits now actually going back to the IITs. We've been very passionate about this endowment right from the day we conceived in 2011. We started working on the endowment funds across the IITs. In fact, we were successful in helping India's first endowment fund at IIT Delhi. It was targeted to be $1 billion fund, launched by the Honorable President of India at Rashtrapati Bhavan. I was also there to make the presentation. And now other institutions are also following. IIM Ahmedabad set up their incubation or their endowment fund after that, and other IITs are setting up. The idea of this endowment is also to help very early stage entrepreneurs and also the innovators to help with promote their ideas. And this is something which we believe has to be at the core of a support system which has to be developed. And we also have a platform called IB Camp, where we onboard startups at very early stage to help them connect with the entire ecosystem, whether it is mentors or it is corporates or is it incubation centers or IITs or IIMs themselves or other education institutions. And that platform currently holds and has curated about 3,000 startups on the platform, helping them not just with the funding part, because as rightly said in the previous discussions, that funding is just one part. I think the other important part is the mentorship or the access to the corporates or the access to the incubation centers, And we tried to bring that to one common platform, which is Ivy Camp. And now it's become the largest platform, which is helping connect all the startups through the single platform. We believe that, given the pace with which the entire funding landscape is improving, and we just talked about the numbers which were just mentioned. Of course, India is yet to catch up with the top two countries, US and China. But I think the pace of growth is very good in India right now. Even though there are about 55,000 registered startups under the DPIIT program, we believe, as per our estimates, about 20,000 of them are funded by some form of angels, whether they are friends or families or organized angel networks. The challenge is really at the next round of funding. There are only about 500 to 600 startups that would have got Series A funding, which is a very small ratio. And then the funding after Series A, which is Series B, Series C, we are again seeing a lot of funding coming there. And that's why sometimes it feels that the valuations are getting heated up, because a lot of funding is chasing startups at the Series B, Series C stages. But the gap really exists at Series A stages, where we as Ivy Cap also operate, and therefore we try to help these startups to come up from that stage. And we also believe that India needs a lot more Series A venture capital funds who need to be encouraged. China has close to 1,000 VCs, and therefore is able to fund many more Series A startups as compared to what we are able to do. But I think situation seems to be improving. We are seeing a lot of positive encouragement from the government as well. There are lots of government departments who are actually now coming forward. We just heard, Mighty also very proactively supporting VC funds and startups. And we've also seen Department of Science and Technology, PIRAC, and of course, SIDBI has been managing the fund of funds of the government and has been very proactively supporting venture capital funds. We are now seeing positive movement towards pension funds capital being directed to venture capital funds. And I think these are all positive movements which are happening, even though, as rightly said earlier, the real issue is still at the execution level. While the intent is very strong, I think at the execution level, there's a lot more work to be done in terms of promoting more venture capital funds and more startups in this country. But I think the direction is right. I'm very excited about where we are, and thank you so much for inviting me to this panel. I'm very happy to answer any questions at a later point.
Thanks, Vikram. With this, I would invite Mr. Lloyd Matthias, who's an angel investor, to come in and share his initial thoughts.
Thank you, Devrup, and pleasure to be part of this very interesting panel. What I will try and address, the focus of what I'm going to talk about is really what can help early stage companies to go out and get funding, right? And just want to make a few introductory remarks. I think the first part is really for the promoters or the founders to really have the passion and the seriousness to what they're doing, right? Everyone before me talked about the fact that there's a lot of hype around startups. It's become, what is called very cool or very in or very trendy. I think the whole issue is about whether a promoter really believes that his product or his concept or his service is going to go out and change the world. So I think one is the passion is that's what's core. In terms of funding options, I think the hierarchy is well laid out. I think the first part is really when you have the conviction is to pull out, what savings you have, but really get people who are closely involved with you, what is called the friends and family or past colleagues, people who believe in you and the concept. I think that's the first part. The second thing, which has seen a sizable rise in the last couple of years, are angel networks, right? And I think what's a positive trend is that angel networks tended to be earlier, built around people who are CXO levels and high net worth individuals. I think to a large extent, or to some extent, that has got democratized. I'm seeing a lot of angel networks that actually come from, smaller towns where there are the retailer distributor community who are actually seeing angel investing as a new asset class, right? Given the instability in, the real estate markets or other forms of assets. So I think there is a lot of investment, early stage investment coming from smaller towns. And that is also helpful because that set of investors looks at it more than just in terms of returns. Very often they're also willing to kind of help a startup, right? Because they're distributors or because they know certain markets very well. The other thing, of course, is the rise of early stage funds. And most of you can look them up on the net, and that's pretty obvious. I think an interesting thing that many startups disregard clearly are two categories. One, I would say, are family offices. And now there's a burgeoning amount of family offices. And second is a lot of large corporate funds. Now, looking at an Intel or Qualcomm, you wouldn't imagine that they would fund a very early stage company. But the reality is that they have a kind of venture fund arm that works independent from the core company. And they're always looking at products and technologies that are aligned with their business, right? So they take these kind of, early stage, investments into very small startups, which they hope will be aligned to their business. And I've seen, guys from the large corporate funds really struggle to actually go out and find a suitable match. I think that's one big area that's critical. The other one that I think Jeet Vijayvargiya of Meaty highlighted was really government funding. And, I didn't know about the depth of funding. One is aware of, some of the incubation centers, the Atal Innovation Labs. But I think it's very heartening to know. And I think that's an area that a lot of early stage investors tend to ignore. So I would say government funding is great to hear that, which is very interesting. Just a couple of points on what are the things that founders and startups need to look at. I think one is, while funding is obviously the lifeline and important, I think it's also good to spend some time trying to find the right investor, right? What is the kind of investor who can add some value to your business, right? Somebody who knows the space well, somebody who can mentor you, someone who can offer his expertise. Neelam mentioned very often is that a lot of startups struggle with go-to-market, right? And there are a lot of seasoned executives who can actually help you in that direction. So it's important to look at more than just funding and looking at larger areas of expertise. And very often what's holding it back is the inability to ask, right? To go out really and ask. The second thing that I would kind of emphasize a bit with a lot of startups is, make sure that you build some IP around the product, right? Doing another Me Too startup is something that a lot of investors see. But the moment you have something unique in your proposition that is, IP protectable, I think that adds tremendous value. Right. And the third part, which one of the speakers ahead made, was really to take a lot of effort and time to understand your financials. Right. If you don't have enough in the runway to keep you going for more than 6 months, then that's a challenge. Right. So it's very important, no matter what your core proposition is, to get someone who can financially advise you on how to keep business going over at least a year's period. That's the kind of runway you need to work at. I think that's something I've noticed a lot of founders tend to disregard, and that tends to be a bit of a derailment in the business. Thanks, Devru.
Sure. Thanks, Lloyd. With this, I would request Mr. Vijit Bhaskar, the National Head for Digital Banking Partnerships and E-Commerce at ICICI Bank, for his initial thoughts. Vijit, over to you.
Thanks, Devrup. I guess, I'm the only person on this panel who's going to talk about debt and, not talk about, either funding or equity. And therefore, I think, what we do should also be to a certain extent seen in that context, because typically when you do an investment, you're doing an equity participation, obviously, even if you can get one multi-bagger, it takes off all the other investments. But in the case of banking, when we do funding, unfortunately, our upside is limited to 3% and our downside is to 100%. So, and that's the reason why we look at, any such funding in any entity a little differently than typically what, the way you would see when you're doing equity participation. Having said that, I think, right from 2016, I've been working very closely with this ecosystem, be it with the startups, fintechs, etc. And I think, the whole ecosystem has matured to a large extent. I think there is a clear understanding on as to, how do these models work? At what point of time will at different entities be able to chip in? What is the sort of support that they can get from different ecosystems? I think there is a fair understanding. Obviously, I think like some of my other fellow panelists said, I think maybe there's a little bit more awareness that we need to do, but I think there is a large understanding on as to how this works, and it's appreciated. So we've been, looking at therefore this segment very, very closely, and the approach that we've taken, and I think most of the banks have a similar approaches. I think we've divided them into three different categories, right? There are some of the startups who are a little bit more mature, who have been in the running businesses for 3-4 years. They have some sort of an established business model. They have some amount of established cash flows. These entities certainly, which probably, 3-4 years back, we may not even look at it because of the fact that, their balance sheet was not profitable, or they did not show cash flow, positive cash flows, etc. I think that paradigm shift has happened, and it's not very critical that it needs to be evaluated from that perspective. I think today there is a much more appreciation for the fact that there is a strong product, there is a strong, execution focus that has been put out there, and there are cash flows. And obviously, the either the losses or the revenues not coming in is basically because of the fact that the businesses are expanding. I think to that extent, there is that much amount of appreciation, and I think those entities certainly today banks are in a position to fund. There is debt that can be taken to meet those working capital requirements. And I also heard that one of the requests that the startups have is about the cost of capital. Obviously, when they look at it from a bank perspective, obviously the cost of capital is very, very attractive. So I think from that perspective, if you see the larger ones, which are a little bit more mature ones, I think there is certainly that appreciation. And there are also very unique products that have come through, because of the fact that it is good for the startup, and at the same time it is good for the banks, because typically you see that working capital requirements are because of the fund flow mismatch, right? And therefore, if there is a fund flow that is going to come through, and there is an immediate requirement of funding that is required, the two can get net off, and therefore it's a win-win for the ecosystem. Then comes, a middle level where probably they've raised a Series A, Series B, or maybe, they're just going to raise a Series A. I think these are entities where, there is, again, I think the banks today are willing to take, are willing to look and fund those entities because of the fact that there is a business model. They seem to have gone through this whole evaluation of the private equity firms or any of the other people who are funding. And therefore, there is some amount of validation to the entire business model. Once therefore there is an entity with that profile or that fabric, then again there's this whole support that the banking system gives to try and see as to how some of those funding can be done. It need not be large funding requirements. It need not be a working capital gap requirement, but it could be from the perspective that it's a business loan. It could be from the fact that you're giving actually a business card for meeting their requirements, etc. So I think that is also happening. I think the last part, and which is where I think a lot of still work needs to be done as far as banks are concerned, is I think for people who are setting up new. Right, who's just starting a particular business, they've got an idea, they're still setting shop, they're still trying to prove the concept, the prototype. And I think there, while of course, the banks do help from the part of Startup India program or be it Mudra loans. But I think the way we are approaching this whole set of customers is a little different, in the sense that what we're trying to do is we are actually trying to understand as to what are these entities doing. So to that extent, we try and reach out to incubators, to accelerators, to private equity firms, and we work along with them so that they actually get into a banking relationship with the bank. Now, what happens when there is a banking relationship is you have a better understanding on as to whether there are transactions that are happening, whether the customers are responding, whether there is some sort of cash flows which are happening, is their initial prototype working, etc. Now, the big problem that these startups have is that they don't have time for banking, right? So therefore, we've tried to put through a suite of products which makes it very simple. So in the sense that, can we enable all of these things digitally so that, they don't need to waste time doing many of these things. For example, if they want to pay foreign exchange because of the fact that, they need to pay for cloud or they need to pay for advertising, etc., can that whole trade transactions be made simpler? Can you try and actually onboard them, therefore, on digital platforms so that there is better understanding? Can we do connected banking so that it's all API-based banking, and therefore they can actually test their requirements in a simple manner? Also, from the perspective to to try and see as to can we give them some opportunity to network so that they have an idea as to what the other startups are doing? Are there customers within our infrastructure, within the ICSA ecosystem, which they can tap? And therefore, how can we create an enabling environment so that these startups can actually start doing business? Once we see that there is this whole idea working, there is cash flows are getting generated, then we are in a much better position to probably give them some sort of funding so that they can actually start growing their business and it meets their requirement. So I think that last stage is where it's much more evolved and much more involved, because of the fact that you need to really understand them before you can start funding them. So that's how we are basically looking at this, at the startup ecosystem. Over and above this, of course, as a bank, we also do some part of, we also invest in some of these entities. We do participate from an equity perspective wherever we think that there is a strategic fit, and if they are fintechs, or there is an opportunity where we can leverage each other to grow. Then obviously we also look at equity participation as well. I think these are some of the thoughts that I wanted to share, with all of you.
Thanks, Bijit. That was quite informative and useful. So with that, we will move on to the next part, the next section of our discussion today, wherein we come with certain focused questions for the panel members. So we'll start off with Mr. Ajit Vijayvargi. So we have seen the National Policy of Software Products, which was a very impressive policy aimed at helping in developing Indian products. So as MSH, what are the steps that are being taken which is helping Indian startups bring in world-class, world-quality products, and which are ready to be used globally, which are ready to move globally? So over to you, Mr. Vijayvargi.
No, I think it's before I answer that, I think it's a great panel you have here, and quite diverse viewpoints and very interesting and to the point. Regarding this question, I think I briefly alluded that we are trying to graduate from being in the value chain, from being an IT service provider country to now actually looking at the software development, right? Because we can't beat China, or we can't become the one leader by following and doing what China did. We have to be different. We don't have the capital at the government level to be creating all the crazy infrastructure, right? Because that's very heavy capex. We need to look at where is our competitive advantage lie as a nation. As a nation, we might not have be the topmost in the economic wealth, but intellectual wealth, we are among the top. We are creating more unicorns than anyone else now. We got so many unicorns, and this decade belongs to India when it comes to innovation. So the mind is our wealth of the population dynamic demographic dividend that we have right now. So there's a concentrated effort within the ministry to promote software product development, and that's what I alluded to when I said we are launching this fund of fund, whereby government may be putting in 5,000 crore and then getting the pension funds and others FIIs participating alongside to get it up to 25,000 crore. Because the idea is a multiplier effect. Because if we put in 5, do a multiple with the other LPs and GPs at the FOF level, and then when the money goes to the VC fund, they invest in 10 different companies with their own LPs. So then you end up with a 3-layer multiplier effect in the ecosystem development for capital market. So that actually policy has led to this fund of fund being created, which is very close to, I think last mile, more or less, in getting approved and being implemented. That's one initiative. The second thing we are doing is we are launching a relatively smaller scheme for accelerator development. Because India has developed a lot of incubators. We got a lot of idea level startups, a lot of these, prototype TRL 5, TRL 7 level startups. But how do you actually take these to the next level? So acceleration ecosystem is what we need to develop. So we are launching something called Samrit, which we should be sending out the notification, I think, next week, whereby startups that are actually in the software areas and the digital product areas can apply directly for funding. And that is giving probably like 40-50 lakh rupee per startup is where we are looking at through that accelerator funding as well. So that's something else happening. And third is we are developing some mission we have internally at MSH and Mighty is to aggregate the data streams, create data lakes, data streams, because data is the new wealth, is the new oil, like our Honorable Prime Minister says. So all this data is the raw material that the industry of tomorrow needs, right? If our startups are the industries of tomorrow, then the raw material they need is not the traditional raw material. Data is the raw material. So we are creating data streams, data lakes, aggregating data across all the verticals, be it health in the health domain, be it in the automotive domain, be it in the human behavior domain, in terms of metadata and desensitized data, which can be made available to startups to train their algos and their AI orientation products. Fourth thing that we are doing is actually developing deep center of NPI, National Program on AI. So that is actually something that's been conceptualized at this point, which is also close to the, 80% being done. So hopefully before the end of this year, that can also be implemented, whereby the idea is we'll be creating a lot of these AI centers around the country that will look to, piggyback on all the emerging technologies that can be AR, VR, AI, blockchain. So that's the area that we are working on. So at the Ministry of Electronics and IT, we are trying to, because one thing that pandemic has taught us that digital might have been the ancillary or auxiliary or support vertical for industry, but now digital has become the main vertical. Everything is being done digitally. Telehealth, tele-education, you name every industry is just moving remote now. So we are taking a bold and big steps in every domain that we can to create all the platforms across various ministries. So all the government work can be done digitally, all the customer citizen support services can be provided digitally, all the startup resources that are needed can be aggregated digitally. So a lot of these initiatives are happening within the ministry. So I would tell our startups that, just wait and watch and stay connected. A lot of good things are in the pipeline. And I know there's always a problem of implementation. There's always a challenge in the government when it comes to implementation. But one thing I'll tell you, I'm a private sector guy. I'm not, I've been here in the ministry for 9 months only and not a long tenure scientist person. But the goal is that government is very amenable to bringing private sector people in the house and doing more stakeholder engagement to do, instead of doing top-down policy, do bottom-up policy making, whereby we can be at least a little bit more receptive to the needs and provide targeted solutions which actually make an impact on the ground. So a lot of things are being tried, and hopefully, some of them will work really good, just like any other initiative in private sector, right? We got to try a few things as a startup, and maybe something will work good for us. So we are doing the same thing, and we're all in the same boat in that regard.
Sure. Thanks, Jeet, for listing out all the initiatives being taken, and these are really exciting ones to hear about, and we look forward to seeing all of these come through. With this, I'll move on to the next question, which is for Mr. Sudhir Kumar. So in the recent times, we have seen ISRO driving a lot of programs and initiatives to help bring in and encourage startups in the space sector. For example, we've seen programs like SEED, or we have seen incubation centers at the NITs, or signing of MOUs with IIT Madras, Startup Agnikul, etc. So how successful has these initiatives been? And what are the learnings? What are the future plan for ISRO for further helping startups, encouraging startups?
Sudhir, you're on mute.
Sudhir, you're on mute. We cannot hear you.
Yeah, we can't hear you.
No, we still can't.
We can't hear you, Sudhir.
I think there's some problem with the connection. I cannot see the mic icon in front of your name.
Varun, sorry, say that again.
I think there's some problem with the connection.
So maybe we'll move on to the next point, and we will wait for Sudhir to come back, and then we will move on to that question. So I would request Rohit to come in, Rohit Bhayana. So Rohit, you have yourself invested in multiple startups. So when you look at investing, what is it that really matters to you? What is it that excites you? Is it the founding team profile, or is it the idea, or is it something else? And as a follow-on or an add-on to that, what would be your suggestion to startups which are looking at funding investment? How should they structure themselves? So over to you, Rohit.
Sure, thanks, Devru. So one of the first things which we look for is what we call, I'm sure everyone has different ways to articulate it, is founder market fit. So a lot is spoken about product market fit. What to us becomes even more important than that is founder market fit, because fundamentally, once there's a match between the DNA and the clarity and the perspective of the founders or founders with the market they're playing in, the products will evolve over a period of time. And no matter what stage you're in a seed stage, you're in a late stage, or somewhere in between, products evolve, needs change, the business pivots, many of those things happen. But all of those happen in a much more congenial and a probabilistically positive background when the founder market fit is solid. So that's the first thing we look for. The second thing we look for is that the team that's coming together is coming together with a very clear purpose of solving that at the stage they're solving it in. In certain business models, the problem they try to solve is at a stage which is you need to you need to walk the first 3 steps before you start running for the 4th. And they start it's just because it's very aspirational, it's very sexy. They'll just straight away jump to the 4th stage without really thinking to the 1st, 2nd, and 3rd, which are the heavy lifting stages, which are the more complicated stages, but will take some basic fundamentals of the business model. They would just want to jump that, and those are things which we are very watchful of. So that's the other part. The third part is, and it's critical coming in this session on funding, teams and founders put a lot of focus on customer need, building their own team, and technology. They put a lot of importance on that. Psychologically, they put a lot of importance on capital. Actually, they create a fear psychosis of capital, or in the giver-seeker parlance, they think of investors much above them, and therefore they would not address that at the right time, but they will keep staying focused on customer need, team, and technology. And then when they think the timing has come, they want to then start really running hard behind the investors, making that equation, which in any case is a challenged equation from a demand supply perspective, even more challenged. So therefore, capital becomes, while they're all the time thinking of capital, but from an approach and a proactive planning standpoint, they're extremely reactive. Whereas I've seen some amazing teams, which very early on start putting on a capital headset as well. So alongside customer need, team, and technology, they'll put a 5th hat called capital, even when they're day 1 in their business formation. And they'll start thinking on those lines, and they approach it much more proactively. And when such founders and when such teams come to us, it's vividly night and day clear. The difference between them and others is night and day clear. You might be too early for us or too late for us, doesn't matter. But capital is a 5th big thing on the block. You have to have it as part of your thinking process. The last thing I want to say is, I think COVID, the pandemic, has just enabled reach and access and networking tremendously. It's so easy to just jump on a Zoom call or a WebEx call and just get on connected with people. I think for some reason, capital raise is still largely, I would say 95% of the people still link it with a very physical, it has to be a meet in person kind of a thing. It doesn't. Actually, with the pandemic, I would actually make one point, which is, and I'm sure Vikram will agree with this coming from a similar background, investors like us love to develop proprietary deal sources. We love it when founders and teams and startups reach out to us. We love it. We just absolutely love it. However, founders and teams, on the contrary, have this, as I was saying earlier, this fear psychosis or this giver-seeker psychosis where they don't want to reach out to investors early on, please reach out. This is a great infrastructure available to you. The digital infrastructure is a great infrastructure. Start developing the networks early. Just start working with investors very, very early on. They love to see how you're growing. Even if they don't invest in you, they love to know how things are changing in your lives. They love to see the pivots you're making. And that just creates a huge sense of comfort when making the ultimate decision of investing in them. So to my mind, that's a very, very important thing. One other thing which I said, my previous point was the last point, but just Dave Roop, overlooking all the points which have been coming so far, one thing I'm realizing, and I'm kind of weaving it into my thoughts, is that with every investor might be venture debt, might be venture capital or equity, might be the government, might be, venture studios. Intent is there, infrastructure and providers are there. A huge missing link is awareness. So, even for someone like me, when Vijit was talking or when Jeet was talking, so much of what they were talking was alien. And I'm talking here as an investor. I didn't know the bank was doing so much. I didn't know the government was doing so much. So I can imagine that when you think of a startup, how little they know, how unaware they are with alternate sources of capital, even with mainstream sources of capital. So I think coming into this question you asked me, Dave, my additional thought is it's extremely critical for not just the investors to kind of keep communicating what they're doing. I think it's extremely important for founders and startups to reach out to alternate sources without any hang up of thinking, oh, I'm not right now ready for venture debt. You don't know what Vijit has for you. You really don't know what he has for you. Similarly, not to think about, the government, Jeet can just give me 40 lakhs and no more because he's just going to do a very early stage accelerator kind of investment. You don't know what he can do, what possibilities exist. So I think the big message I have for startups is don't have fixated notions on what might be possible. The possibilities, because the country is ready, I think the possibilities are enormous. You have to ask for it, and perhaps it will happen. And the combinations are just enormous.
Thanks, Rohit. These were great messages, very important, very powerful for all this people in the audience, the startups who are listening. With this, I'll again go back to Sudhir Kumar. Sudhir, can you hear us?
Is it okay?
Yes.
Fine, thank you. Sorry, there I think I could see the unmuted symbol, but still my voice I just switched off. Sorry for the inconvenience. Anyhow, to get back to the question, if you just see the space domain from the BRIAS report or international report, city report, they project that by 2021 or 2025, it is going to be right now 360 million economy, something like that people say. But if you just bifurcate the market segments, only the deep tech comes to launch vehicle and satellite is around 20%. And government programs like, let's say, Gaganyaan or Man Mission, ISS, that kind of research activities may be contributing another 15%. But 60 to 70% is applications. You call it as communication, you call it as Earth observation applications. That is rather occupying the major chunk of the market share. In these two areas, the provision or the opportunities for the startups are huge. Example, I just tell you before jumping into the actual programs, what is the potential? That is you call it as urbanization, the taxation, the agriculture side, insurance, crop estimation, cash crop estimation, food security, food distribution, crop distribution, both in national and international markets, water distribution, potential for water logging, and whether how to distribute the water, predictions. All these things are for the common people with very less capital, but with a lot of intelligence. The startups can penetrate into the market. That is one aspect the startups should understand. Very easily they can penetrate into the market. The second thing is most of the users are government. And private industries are there, but private industries like banking is there for insurance estimation or let us say such kind of things, but they do require some guidance from the government of India. So, and traffic management, if you take urbanization, taxation, traffic management, such kind of things, water resources management, these are all very critical things with very easy technology. One can penetrate into the let us say social ecosystem. So these people should understand and they should know, but only what is required is again software. See, fortunately, space cuts across many ministries or many disciplines. You call it as surface transport, you call it as navigation system, you call it as forestry, you call it as agriculture, industrialization, networking, NTPC, such kind of this thing, ONGC networking. Every ministry or every discipline has got a space element. So my intention of saying is startups has got huge potential in these elements. One has to understand the requirement. Then coming to the ISRO programs, or what are the encouragement programs? Yes, I do accept with the question that ISRO of late started the startup encouragement through different platforms. One could be a seed, whatever we have named, chairman announced in the recent past, the program Space Entrepreneur and Encouragement Program, which supports the startups through mentorship. Fortunately, our facilities are very open to the industry because very costly facilities, infrastructure intensive facilities for building and testing the different flight-worthy elements. That Government of India and Department of Space has thrown open to the industry to make use of the facilities. Even though the incubators are supposed to make use of the lab facilities, etc., in addition to the office support, but we ourselves came forward to throw open the facilities for the industry. That is one type of encouragement program rather government is taking up. The second thing is in the academia, in terms of establishing the incubators, because our intention is the emerging students, the final year students should get attracted to the entrepreneur skills and opportunities in space. By the time they come out, they should not waste their time. Whatever the knowledge they should acquire in the space domain, they should acquire during the final year. And by the time they come out, they should come with an entrepreneurial idea. That was the intention of keeping the incubation centers at different engineering colleges. It is not that for that particular engineering college alone, the Space Incubation Center is supported. In that region, maybe in the vicinity, anybody, any other institution can approach the nodal agency, they can get into the ecosystem. That was the idea. But in addition to that, we have several MOUs with several universities, and it is only just, let us say, we have started, and it is going to grow in a multiple folds. Whichever the academia or industry wants to enter into some kind of agreement, research agreement or innovative collaboration, ISRO is open. So in that way, the students and academia can get into the ecosystem. And we have proactively, what we have done is we have collected several topics from our ISRO centers, because more than 20 to 25 centers across India, they are there. Because it's a very niche field, probably the students who come out of the universities may not visualize what is the potential, what is the area of activity, or what is the area of research and innovation that they can do. In terms of documents, we have taken out, and Yukti Sanchita is one document which we have published in the public domain, research areas. So these are all the collection of several niche areas or niche proposed ideas which emerging, let us say, in the space domain, we have documented and thrown open to the public, so that anybody can get to know in what areas this probably the potential is there in the space domain. So these are all some of the things which we have initiated from department side. But in addition to that, we have been in touch with Startup India as well as Niti Aayog. They have been cooperating us for the funding business. But in addition to that, we started identifying.
I think we again lost him. So while he comes back, we'll move to the next point, and I'll like to bring in Neelam Dhawan. So Neelam, you have been in leadership roles in large tech firms. You have been a stalwart in the tech industry in India and led large firms. And now you have also been in advisory role or as part of the board of various new age firms and startups. So based on your experience of running organizations as well as advising startups in running their organization, what do you suggest for them for optimal utilization of funds or capital once they have raised it? Should they focus on product development and R&D? Should they focus on team building? So what's your suggestion to startups after they have raised capital?
Devrup, it varies from company to company, from one startup to the other as to what they need to focus on their funds. It depends on the need they have. When you run a large company, when I was running as an executive large firms, we were focused very heavily on P&L. We were focused on country P&L, definitely to show that India is not a country where money is just, there are no returns on capital. Most American firms think that there are no returns on capital, it's deep discounting market, and hence do we invest in this business? And every quarter you are looking at those results. But when you go into the startup world, nobody is thinking about profits. Nobody is thinking about where is the P&L. The truth is, valuation gains are based on what's your revenue, what's your free cash flow, how profitable you will be, and how much growth are you showing. So from a startup perspective, when I look at it, there is a need to raise capital, but my advice has been to whoever I've advised, saying, don't go to raise capital when you're in dire needs. You have to raise capital when actually you don't need it. Because when your P&L has got all the debt you want, all the losses you have booked, who's going to lend you money? Who's going to look at it and say you know how to run the business? So go and raise funds when you actually don't need it, when your P&L looks little better. And in the startup world, it is all about burning cash initially. So I kept on saying to people, early days, factories used to be set up before they could manufacture and sell. So those factories were looked at a lost time when you were setting up the business. Today, we are setting up fairly quickly because we're doing so much online, and it is okay, we burn cash till the business gets set up. But there is an urgency about how quickly do you set it up, how quickly will you receive returns, and how quickly will you grow your business. So depending upon what you need, I would say most startup are focused on what is the solution I should get to the market. So they want to get to the market very quickly, get revenue, go borrow money. I also feel, not borrow money, raise money. I also feel many startups are in this game of becoming a unicorn, as Sandeep Goel mentioned a few minutes ago, without showing is there a real value for what they are trying to do, and have they created a company for longevity. When you talk to a promoter and he'll say, okay, I think I'll run it for 3 years or 5 years and then sell the business, very clearly he's not going to set it up as a company which will exist long term. He's not even looking at growth opportunities, he's just looking at capitalization of what he has created. So based on what the startup is looking at, you tend to advise them where to spend, right? But I think the first rounds of money are either going into finishing the product, and second round is going into and going into market reach. Those are the two which are fundamentally where the money is being spent today.
Sure. Thanks, Neelam. These were very valid, very important points. Just wanted to check if Sudhir, are you back? Okay, so we'll move on to the next question, which is for Sandeep Goel. So Sandeep, first of all, congratulations. Mobilix is a new unicorn, and you have successfully raised funds even during the pandemic times. So as a startup, what are the challenges that are there in raising capital? What are the initial hiccups that startup faces? And what's your suggestion to the startups who are listening to this on how to overcome these?
Sure. I'll just extend what Rohit was saying in his talk and talk about 4 or 5 points. In fact, that's the approach we have been following ourselves as well, whether picking up a new problem or earlier startups that I did. First is the right problem statement. And, that's a very, very critical thing, that what are you solving for? Today, a lot of people, come and talk to me, youngsters as well as people in the middle of their careers. And they say, I want to do a startup. And when I ask them a question that why do you want to do a startup? The answer is that I'm tired of doing a job. Employee ban ke thak gaye, the statement. Now, effectively, the problem statement here is that you're not liking your boss. That can't be a reason to do a startup. And I can tell you, probably 50% of them come with this statement, saying that I want to do something of my own. I don't want to do a job anymore. Right? That can't be a problem statement. So you have to find real problems. And if you look at some of the success stories, and Redbus is my favorite one, the origin of the company was because the founder missed the bus when he was going home for Diwali. And he felt the pain that, because of this system being so unstructured, he couldn't get home for Diwali. And he just wanted to solve that problem. The passion, the pain was felt. So if you have a real problem statement, which is other than you having a problem with your boss, you should look at doing a startup. Second part, which is specific to Indian context, is the articulation of problem statement. Many people have the right problem identified, they fail to articulate. And with VCs, with the people doing the funding, you get very short span of time. You have to communicate your message loud and clear in a short span. So make sure on articulation, people take help, they do dry runs, they bounce off with other people or mentors or advisors they have. So that's the first point, having the right problem and right articulation. Second is, as earlier also it was mentioned in the panel discussion, VC world has become specialized. It has segments, sub-segments. If you want to do B2B, there are different set of investors, B2C, healthcare, microfinance. So it's become a specialized world, and you got to understand that who are the right investors for me, which VC should I go to? Of course, the classification of, whether you want to go to venture debt, venture capital, and education around that. So choose the right VC who can, apart from just giving money, who can add value. Third is the opportunity sizing and business modeling. That's very, very important. Many pain points are valid, and it is especially true for Indian context. You will find a legitimate pain point, but no one will pay you for solving that problem, right? It will be on your cost. And I have come across many people who identify a very valid pain point backed with no business model, and they don't know who is going to pay for it, whether the customer side will pay for it or supply side will pay for it. So it's very important that you define the business model and have clarity that where the money is going to come from. Initial days, you can look at burning. There is a popular model called freemium, where you say that, okay, initially you give it for free and then you charge a premium once you've started adding value to your customer base. But it's very important that you're clear about it. Giving it for free should not be an accident. Indian market is very demanding. Customers are extremely demanding. Either you will have cash flow issues or you will have margin issues. So the business model, financial model part is extremely critical. And of course, the size as well. Few problems look very serious, but when you do the sizing, you realize it won't even cover your costs. So that's the third step. Fourth is the right team. It's very important for you to have the right team on board before you go for funding. Now, team either has to have the credentials that they have done startups time and again, they carry the success stories, or they have to have that passion and story and pedigree, either of these, which people bet money on. A lot of investors bet their money on people today. Idea comes secondary, and they just believe that if this guy is saying he'll do something, a lot of it comes out of your passion. Again, a very, very important tip here. I come across many people, and that's specific to India again. I ask them that how many of you are full-time. So, I put small capital in companies, and many people come to me saying that we are doing this. My first question to them is how many of you are full-time? And to my surprise, in many cases, you realize their answer is that right now I'm working somewhere, but moment we get funding or it reaches X stage, I'll step out. Right. So it's a playing safe game. Entrepreneurship is not playing safe. It is, there is a saying that being an entrepreneur is like jumping off the cliff first and then building a glider on the way down before you hit the ground. So if you're not carrying that attitude, that is not going to fly. If you yourself have not come out full time and started working on it, no one is going to put money on you. And the last point is that you have to look around in terms of whatever problem you're solving, what are the other options people have to solve that problem today? What's your competition like, etc. So don't undermine the competition. Many a times we think that I have got a brilliant idea, but when you dig deeper, you realize 50 other people are already trying to solve that problem. So it's very, very important you do your homework. And a closing tip, which is on the financial side, be frugal. Even if you have got the funding, whatever seed, series A, be frugal. Make sure you put your money at the right places. I have seen many people, moment they receive the funding, the first thing they do is have a fancy office. And when you ask them, why are you doing this? They say that if I have to attract talent, I have to have the nice office. Now, I can just share my experience that people for a startup, if they are joining you because you have a fancy office, you have got the wrong team on board, right? You have to get people on board who are sharing the same passion, same vision, who are willing to come on a salary cut and say that we are going to build the organization together. So be very frugal, spend the money at the right place and ensure you have the right team. So these are, 4 or 5 very important steps that need to be followed to ensure that you land your story right and you use the capital right.
Thanks, Sandeep. Those were great tips and suggestions. I'm sure the people who are listening, this would greatly help them. In fact, I could relate to so many of your points that you were mentioning about. So great. Thanks, Sandeep. So I would again go back to Mr. Sudhir Kumar. We had lost you in between. I can see you're back. So maybe if you can put in your concluding points.
It's okay. I think there is a power cut. I don't know. It's misbehaving in a very odd first time I'm seeing. Okay, fine. Now I just mentioned whatever I thought of mentioning it. Only I just wanted to finally say that a lot of opportunities are there for startups in the space business, not only in the space sector, which is spin-off sector, software area, and lot of opportunities are there. And government is encouraging these startups. Please make use of the opportunities. Only if you wanted to get to know something more about that, you please connect to either of our incubators or to us with directly. And you should have, as earlier our friend said, it should not be a fancy thing, putting a chair like a CEO and running something. Serious people only will get through definitely. But whatever the support that is required from the ecosystem, yes, ecosystem is in place. But only thing is you have to jump into the well. You have to take the risk. And these are all government programs. You please get to know. And another madam has told that different programs are running in different ministries and different departments. I think the ASSOCHAM, such kind of let us say people should take lead and summarize at one place. Let us say defense IDEX is there. We have some program. Startup India is there. Different ministries and different departments has got different systems. And incubators also, the understanding, because several startups will come to us. When they go to X incubator, they ask for some kind of rental agreement. If they go to another incubator, they will say, only I will have a stake. Because these such kind of things, some kind of uniform policy or uniform practices should be adopted. Maybe you can bring some kind of not regulations, I should not say, some kind of uniformity, because incubators also require some kind of money to run the incubator setup. But in what way it should be supported? Now, thanks to Startup India, that now Startup India is encouraging the incubators, not directly to the startups. A portion will go to the maintenance of the incubators, in addition to giving the seed fund to the startups. Such kind of program should be encouraged. And some kind of difficulties in a forum, it is better for you like people to bring out and inform the government, so that government always will be proactive to address the issues. Thanks a lot for the opportunity.
Sure. Thanks, Mr. Sudhir Kumar. So now I would request Mr. Vikram Gupta to come in. So Vikram, you have now recently launched an angel fund to look at early stage investment. So and early stage investment is one of the challenges which startups face. So, what are your suggestions to startups at the early stage? How should they go about looking for early stage investment or angel investment, and how can the startups gear up to meet the needs of early stage angel investors?
So, I was very carefully listening to the previous speakers, and I would say what Sandeep said and what Rohit said and what Neelam said, I think they were right on the money, exactly the points that typically you would think of. But I think, I'll just add to those points because I think they were very well articulated points already. So basically, and maybe pick some of those points and reiterate some of those points and what Sandeep was talking about, doing it for the right reason. And I think, and we also experience something very similar, that these people will come and, may not necessarily be full-time yet and just trying to raise money, and then, we'll make very similar comment, once we raise the money, we will jump full-time. So that's not, displaying the risk-taking ability. So what we look for is basically passion, which is driving them. And I think the example that Sandeep gave was really good in terms of this Red Bus example. And there are quite a few similar examples. Oyo is another similar example, how Ritesh got into his business. And I think if it is passion driving you because the problem that you're trying to solve is a problem that you encountered yourself, you will be able to do a much better job trying to solve it. That's the other thing. And then many times, I think the definition of success, how entrepreneurs typically end up defining their success, and success is typically linked to fundraising. Every time you raise funds, there's a celebration. Well, yes, there's a reason to celebrate, but that's not the yardstick for success. I think the yardstick for success really is what you actually define for yourself in terms of meeting the criteria for your business or solving the problem that you're solving. So that's a very important factor to understand. And I think, again, the other point was what, again, Sandeep also mentioned in terms of the frugal aspect of it, which is treating somebody else's money as your own. Once you raise funds, that doesn't mean that now you can just go and start spending in areas where, which do not necessarily that directly support your business growth. The entrepreneurs who actually believe that this is as if their own money, they actually do a much better job at utilizing their capital. I think the challenge really is especially at seed stage, because as you go from the angel stage to Series A stage and further, at seed stage, there is a much larger challenge from investors' perspective to really filter out entrepreneurs, and the failure rate is very high, and it's not easy to know who will really succeed and who's really passionate about what they're doing, because there are entrepreneurs who are very smart. They will make you believe because they know how to make the right presentations, they know how to communicate. So they may be able to really do a good job in terms of trying to convince you everything that you want to hear, because they would have got good mentorship, good guidance. So they will bring exactly what you want to hear. So therefore, just at that stage, if you're investing just in one meeting, just because you got very impressed with what they said, it's something which also leads to the failure of investment. So therefore, what we typically do is we tend to interact a lot with people, even at angel stage. We want to spend a lot of time with them, understand who these people are over a longer period of time. And, of course, it also is important with whose reference they're coming to you. And that's typically another question that gets asked. How do you reach out to the VCs, or how do you reach out to the investors? And my advice to these startups is that, always find somebody to connect you with the investors, with the right investors, because that actually gives you a little bit more focused attention. As rightly said even earlier, that typically, we would receive hundreds of proposals, in a very short period of time, and you hardly get just 5 to 7 minutes to look at each proposal, and actually you don't end up doing much justice to them just looking at the presentation. So if you really have to do the justice, you have to actually meet the people, but you can't meet everyone. So therefore, going through the right reference makes a huge difference. Yeah, so I think these are some of the important areas that entrepreneurs should keep in mind. The last point, which I would like to say, is there is going to be failure, and not every entrepreneur in the world has been successful right in the first startup they did. In fact, majority of the entrepreneurs who've been successful in their journey would have failed considerable number of times before they actually became successful. You can have plenty of examples, like Robinhood in the US was rejected 72 times by VC before they finally got their funding, and now it's a very large unicorn. And there are plenty of such examples. Entrepreneurs would obviously face failure multiple times, and the ones who have really stuck to their mission, their goals, their objectives, they are the ones who really end up making a real difference. So I think failure should not deter you as long as you are really focused on your objectives. So I think these are some of the key things that I would like to highlight, and always looking at good entrepreneurs and supporting them at very early stages.
Thanks, Vikram. Brilliant suggestions, brilliant points, and I absolutely loved your last point around that. As an entrepreneur, you cannot be afraid of failure. Failure can be there, but you need to stick to your idea. You need to have your conviction. So with that, I'll move on to the next question to Lloyd Mathias. So, what are the various funding opportunities for startup at multiple stages? And I'll also want you to talk a little bit on the cost of capital that Neelam spoke about cost of capital early on. So I also want you to talk a bit on cost of capital for startups.
Thank you, Devru. I think I briefly covered some part of this in my introductory remarks. But the way I look at it, and before I go deeper into the cost of capital, I think the first thing that an entrepreneur should really look at is what is the scope and extent of the funding he wants. I've been part of a lot of investment pitches where one really hasn't seen the need for the funding properly scoped out. Right? For every entrepreneur, you recognize that you are giving away a part of your company, and you're bringing on board investors who can now justifiably have a say in your business proposition. Right? So one is to scope out the need. Second is to really look, and I re-emphasize the point, is the need to look at investors more than from the financial capital. Ideally, to make a pitch to investors who you think can add value to the business. Right? And therefore, another big issue that I see a lot of entrepreneurs forgetting is to properly research your investors. Right? Very often you walk into a room with angel investors or with a potential funder, and you haven't done enough of the groundwork. Right? In this internet age, there really is no excuse. Right? All you do is Google up the person, look up his background, look at the last 2 investments, try and understand the investment thesis of that particular organization. And I think some of this due diligence, some of this groundwork is a great indication of the success potential of an investor, of a founder, right? Because if you're not going to be, having the time, patience, and the diligence to actually look up these aspects, then there is a big concern, right? So that's something I would say. The second little practical tip, given that a large amount of founders are, tuned into the session, I think is the importance of getting your pitch right. What I see very often is that there's a one-size-fits-all, right? A guy works out a little quick pitch and then he's rehashing the same thing to a whole diverse bunch. I think there is an extent of customization. Recognize the investor, recognize his risk appetite, recognize what are the sectors that he's focused on, and customize your pitch to that person. I think that's something that would go a long way. I think it's very, very important to really understand that, and that's something I guess. The third thing I think clearly, and an indication of the internet economy we're living in, is to look beyond national boundaries. Right? You might have a great proposition, might be solving for a great issue, and you see its immediate applicability in your neighborhood, in your vicinity, in your country. I think today a lot of investors are looking at ideas that can scale and actually can scale beyond national boundaries, right? And some of the big success stories and some of the much touted unicorns have actually gone on to solve problems that can be replicated in various parts of the world. So I think that's an area that that is often unignored. But back to the core issue on funding, I think besides looking at the standard hierarchy of angel networks and going down the pipeline, I think the two underrepresented areas to my mind always remain. One is corporate venture funds, right? There's a whole bunch of them. You got to do your research, but you got to go with them with a very clearly focused pitch because they're looking at adjacent spaces to what their core business is about. And I really haven't seen great pitches coming on that dimension because they're always on the lookout. So I think that's one. The other, I think, is really looking at the whole concept of overseas investors. Again, it doesn't seem very obvious, doesn't seem very apparent, but there are a lot of networks, angel networks, that have deep inroads into overseas investments. And for a lot of the world who are beginning to see India as a kind of SaaS capital, something where a lot of services can be provided from the back end, value-added services. I think that's a big opportunity that is often ignored. So I think those are the key kind of watch outs I would offer as tips to startup founders in terms of what they do. And I think that's an area that needs a lot of work and attention.
Sure. Thanks, Lloyd. Once again, very valid points. With this, I'll move to Bijit Bhaskar. So Bijit, you come from a large leading bank. And one of the space which has seen probably the maximum disruption is in the banking and the finance and the payment space. And today we have large number of startups in this space which are poor operating. So as a large bank, how do you first of all, do you see this as a challenge or as a scope of synergy and working together? And how do you see a large bank fitting into the whole scheme of things, wherein banking of the future is going to be mostly digital? How do you see a large bank coming in and working with fintechs? Do you see more of a competition or a challenge, or do you see more of a scope of bringing in synergy? So over to you, Bijit.
Yeah, thank you. I mean, this is a question which I get asked wherever I'm part of any panel, and it's very interesting. And I really don't know actually as to why this question actually comes in minds of people, because invariably then the comparison comes around China and all of those things. But the reality is that first of all, China is not India, and the second thing is even if you see China. Right. Actually, no Chinese bank actually has lost its valuation or lost its market share or actually has shut down. Right. And the reality is that that's a very closed loop, two ecosystem that has been got created by two large players. And to that extent, India is very different. And you see, world over, actually, honestly speaking, because of this whole disruption, I don't think, the banks have lost out, so to say. I think what it does is it basically questions the way of operation. It questions the way you actually approach problems. It probably questions the type of opportunities that get unlocked because somebody is actually looking at certain niche areas to work on. And if you see the banking industry, way back 2 decades ago, probably ICICI Bank or private banks actually came and disrupted some of these things from the whole way the banking was being done. And then probably a decade later, there were a fresh set of banks which came. Suddenly you had this whole discussion around the fact that there are banks giving interest rate at 7%, 6%, etc. So what will happen to the other banks? But I guess that is also a phase, and banks actually adjust and they find their own niches. I think today the wave that you're seeing is the fact that obviously there is digitization. There is this whole payment ecosystem that has got created because you have large fintechs, large tech companies who are actually trying to actually play this entity, or they're called tech fins, who are in this space. But the reality is that if you look at any of those businesses or any of these areas where some of these disruptions are happening, the banking system is an integral part of it, right? And UPI will not be an UPI if the banks do not participate in the whole UPI ecosystem. It ensured that it means that the banks have to up their system capabilities. It meant that the banks had to, if it needed that it had to adopt technology which could manage high TPS, it had to adopt. If it had to, enhance its technology capabilities, it had to enhance, and therefore it's a very integral part of the ecosystem. So I don't, at least we don't see it from that perspective by stating that that there is going to be we will become irrelevant, or that we will not be able to play. We'll be an outsider in this whole game. The way we see it is that I think the word that we use is competition. We say that we will of course collaborate with all of these entities. And if need be, and if there are specific areas where we have to compete, we will compete with this same entity. So I think to that extent, it's a very open architecture that that we have with all of these fintech players or payment aggregators, etc. Why am I saying that? Is for the simple reason that what do these collaborations or what do these partnerships actually help us understand? It helps us understand as to what is the thought process that is there. It helps us understand as to what is consumer saying, what are consumer preferences. Is the consumer willing to adapt certain things which probably we haven't attempted, or we didn't think that there was a need for probably for that particular option to be opened up. And then we have insights about all of these. When we have insights, while we are enabling the partner, it's also an opportunity for the bank to develop those capabilities. And which is what I think, if you see the Indian banks, if you look at, I think at least the top few banks are digitally savvy. It is not that we are there are no digital offerings that can be given. Is it the best UI UX? Do you have the best underlying architecture of technology? It may not be, because of the fact that it's a phase on how evolution will happen. But are the banks moving in that direction? I think they're moving very, very fast in that direction. I wouldn't be surprised if in a couple of years' time, the whole debate will be the reverse as to if banks up the game, will they disrupt all these fintechs and tech fins who are coming to do certain things? Because if the same facilities and same journeys and tech savviness is offered by the banks, then suddenly you have a bank offering everything, actually also offering you the convenience that some of these entities give. So that is one. And the second thing that is happening is, and it's very interesting, is that the banks are now catching up on trying to replace legacy systems with new age technologies, while the so-called fintechs and tech fins who actually build these systems in the next 5 to 6 years time will actually have 10-year legacy systems, because they are not changing, because they built it recently. And I'll give you a small example. The other day I was speaking to it's a large entity, it's a funded entity, it's doing well. So we said that we would like to actually do this particular functionality through APIs. But they turned around and they said that is it possible that we can handle it based on files? And we said, sorry, we can't, because we only have an API-based solution to this. So I guess it's a transient phase. We don't see it from this perspective that it will come and majorly disrupt. What it certainly does is it makes us open up our eyes to possibilities. It makes us think that there are other avenues that customers are willing to are aspiring for and are willing to adopt. And therefore, I think the banks are also upping the game. I think we are also now in that journey where we are building those same products. We are also ensuring that we have the same technology architecture. We also have the same customer journeys and intuitive UI, UX, etc. So I guess it's that journey. I don't think that it's going to completely come and just replace. I don't think that situation is the way we are at least envisaging it to be.
Well, thanks, Vijit. That was a very interesting perspective. And so with this, we move on. We've heard the views of all our distinguished panel members. So with this, we move on to a quick third section, maybe for the next 10 minutes or so, before we have the final closing remarks. We've had a large number of startups and entrepreneurs who have logged in and who have been listening to all our guests today. And there have been a large number of questions that have been put forth by them. So we would want to quickly have maybe 2 or 3 questions responded by our guests today. And So the first one, I'll request Rohit and later on Vikram to come in and this thing. So the question is around, are investors really looking at innovative ideas, or they are really looking at clones of successful startups? And how do someone with an innovative idea really come in, which is not really a clone of a successful startup? So maybe Rohit and later on Vikram, if you can address this.
Sure. So the way investors would look at anything is what's the returns equation? And I'm sure all of us are like that. Investors or not, everyone is like that. So to my mind, whether it's an innovative idea which has a well-proven, it has good legs on which it's built, the market size is attractive, the proposition, the reasons why you think you can solve it, again, the same things, your team, your need, your customer clarity, your technology proposition, the innovative angle, if all that is clear and the market is large, it might be a very early stage idea. And I'm using the word early stage for innovative because you're saying it's not a clone. So that's how some of the best built businesses have got built in the first place. They were innovative ideas, they weren't clones. So I think that would stand. And at the same time, if an innovative idea is just way too sketchy, not thought through, the probability or the returns equation gets to be very worrisome. And therefore, it might play differently for a seed stage angel or a late stage investor, but fundamentally, even as early as an angel would have their own doubts about a very ill-formed innovative idea. Clones of well-established business models, again, there's nothing wrong in it. Actually, if you're cloning and the market can absorb many more players, you know what? If you can absorb 5 Moglixes, please do. You can absorb 5 Oyos, please do. They might be clones, but if that execution brilliance makes that similar model stand out, and that's what your passion is, and you can build a team and you have a viable strategy around it, there's nothing wrong with cloning. I think we have fairly large number of successes created where the third or the fourth player really created what the first one started out with. The first and the second one just scratched the surface, and it was the third, fourth, and the fifth player that really made that space happen. That's what happened in InsurTech. That's what happened.
People can coexist, etc. So what's the size of the opportunity, and how much can a player acquire in that space? And the second part is execution. Right? So the execution is all about the team and the passion to execute and things like those. Now, if it's an original idea, then of course there is an excitement that you're out there to do something, fundamentally different. You may be doing a drug discovery on a cancer, a new molecule, or you're doing a completely new solution for a very, a problem like in the, EV space or some other space where you're trying to develop something totally new. It's exciting, but it's also much higher risk. So one has to therefore accordingly take that call that if it is not already done anywhere else and you're the first one doing it, the risk could be very high. But at the same time, if the market is very large and if you see the passion of execution, then the returns could also be very, very high. If it is a cloning idea which is done elsewhere, at least the risk of the market or the product market fit is a little lesser risk, even though applying to different market could be a different story. But that at least leads you to think through more about the execution side. The risk might be slightly lower, but the returns could be very good, but could be at a different level. So I think that's the way how I would look at it, and basically that's how I would evaluate it.
Sure. So thanks, Rohit. Thanks, Vikram, for your thoughts on this one. Another question that we have is that today we are looking at a lot of startups in the tech space or focused on AI, cloud, etc. What about startups in segments like food or textile? What scope is there for them? How do they come up? So maybe Lloyd and Sandeep, maybe if you want to address that, Lloyd.
Thanks, David. I think that's a that's a great question. I think while the focus is on a lot of tech-related, AI, machine learning, IoT-related startups, I think one sector that seems to be a little underrepresented is slightly more traditional businesses, textiles and foods. There, though, I think there are two opportunities. One remains largely in business model innovation, right? Foods is an old business. There are large existing players. There are major players. I think finding a unique, profitable, and distinctive niche that keeps you out of the ambit of the big players, I think is wonderful. And one is seeing a lot of action. If you just look at the last couple of years, you've seen areas like raw pressery, people making specialized juices, who fulfill a very specific need in the market that some of the big players, the old established players cannot bring in, right? So they create a very, very strong distinctive niche. And now with a lot of hyper local delivery, I think there's a lot of power in that. So I certainly believe there's one, that food promises a great opportunity. When it comes to textiles, again, very clearly having a clear niche. I think the success of things like Nike in the last 3 years really opened up a whole opportunity. I know it's more than just female clothing, but I think if you're able to find a unique, profitable niche that you can serve distinctively, I think that makes for a great yardstick. Right? So really, one has to really look at not an industry in absolute terms, but look at what you can do that existing players can't fulfill, or what the big players don't have the nimbleness to execute. So I think that's the yardstick that one would simply use.
Sure. Sandeep, any thoughts from your side?
The only thing I'll say is, and again, it's the buzzword part, AI, etc., technologies. The question should again boil down to if you're using AI for solving what problem. The problem could be in a traditional space, food space, etc. But yeah, that's true that some of the buzzwords get better attention as compared to others. But there are investors. I have known people who focus on traditional areas, healthcare also traditional healthcare, not tech healthcare side of things. So you'll have to find the right investor. It may not be as easy as in the core tech space, but again, if you articulated well that I'm using AI to solve this problem, I'm sure you will be able to find people in the right space.
Sure.
Shall I add one point?
Yes, please.
See, the artificial intelligence, and especially for food and healthcare, it is aptly used. I'll just tell you a few examples. One is food distribution. You call it as agricultural produce, or even whatever the food item, other than the hotel and restaurant style of thing. See, in the geographically, if you see, aloo is more produced in one area, pyaz is more produced. When you see the geographical distribution and the supply and let's say demand analysis, if you do, the producers are a number of people are there, climatic conditions and so many things will influence the produce, and the artificial intelligence is the best product or tool that can be used to map the supply and demand, but it requires a huge networking. Once the networking is established with a lot of, let's say we have supported one fisheries company where different boats which will collect the seafood and distribute to the people through whatever the e-marketing places are there. They can identify when this particular seafood has been collected, where it is reaching, and what is the let's say time of expiry. Such kind of things is possible in artificial intelligence. And same with the healthcare industry, because that's where again space data will be made useful, because analyzing the huge data and putting into the machine learning process and adding the logics and arriving at, let us say, distribution of bats, mosquito distribution. These are all derivatives of lot of data. Maybe 120 parameters would be there that will decide how this growth is going to happen, what is the seasonal parameter. For that, what kind of preventive measures have to be taken. I think there is an ample opportunity of AI, especially in the healthcare and food, in addition to other, let's say, tech disciplines. Thank you.
Sure. Thanks, Sudhir. So this has been a very engrossing discussion, some very valid, practical points, suggestion, tips which came out. And I think this is a subject where the discussion can go on and on, but cognizant of time, so I would request Neelam Dhawan, co-chairperson, ASSOCHAM Startup Council, to come in for her closing remarks and vote of thanks. Neelam, over to you.
Thanks, Devrup. Firstly, thanks to you, Devrup, for conducting the session so well. It really went flawlessly. I would like to thank all the speakers. The ideas were really well shared, and I'm sure that people would have understood the challenges, the opportunities, as well as some doubts which they may have had around funding. And I'm sure we haven't clarified all the doubts which are there. So thank you for sharing your ideas. And I'd also like to thank all the participants who sat through the conversation. I'm sure you found it very useful. I'll conclude at one remark to Varun. Varun, one of the suggestions I saw in the Q&A or the chat was to say, is it possible to collect what are the various schemes of the government to the best of our ability and put it down as a document which we can circulate to the participants? And if there is something ASSOCHAM can do in that aspect, it will be really useful. Thank you.
Yes, it's a nice idea.
Yeah,
I
Varun.
think it's a brilliant idea to have all of it at one place.
So Varun, we look forward to your leadership in doing that, and thanks a lot. Thank you, everyone.
Thanks, Neelam.
Okay, thank
Bye,
you.
everyone.
Thank you, everyone.
Thank you. Bye-bye.
Thanks everyone.
Bye-bye.